Real estate investing. They say the roadmap to life is pretty straightforward. Go to school, get a good job, save and invest your money wisely for a comfortable retirement. Or so it seems. In reality, knowing how to invest wisely is actually easier said than done, especially in this increasingly turbulent market. So is getting into real estate the key to financial success? Hi, I'm Frugal Bob, and welcome to my channel. In today's video, I take you through real estate investing. We'll look at everything from the various forms it takes to its benefits and disadvantages, and how you can get started. Be sure to stick to the end, as I'll share tips on how you can save up for your first real estate deposit in a year or less. So hit thumbs up and subscribe if you haven't, and let's dive in. What is considered real estate investing? Now there are two major reasons someone would buy property, such as a house or apartment. One is to live in it. The other reason is to make money, either regularly as rent or in lump sum by selling at a markup. The latter is what's known as real estate investing. Basically, you're acquiring property with the goal of making a profit. With that out of the way, let's look at the different types of real estate investing. There's more than one way to invest in real estate, with the most suitable one depending on your budget, investment goals, and risk appetite. The most common ones include 1. Rental property. Rental properties are an excellent investment option if you are looking for both short-term cash flow and long-term capital appreciation. With rental properties, you acquire a property with the goal of renting it out to tenants. The tenants pay you a monthly rent, and the rental income is used to cover the costs of the property, for example mortgage, maintenance, etc. The difference between the rental income and the total monthly cost of having the property becomes profit. You also enjoy capital appreciation in the long term when the value of the property rises over time. 2. House flipping. Basically, you buy a house below market value, make a few improvements to add more value, and then sell it at a markup. Now, keep in mind that with house flipping, you need to build quite a bit of knowledge on how the real estate industry works, especially property valuation. 3. Real estate investment groups. All things considered, managing rental property does take some effort. You have to routinely inspect the property, screen potential tenants, enforce lease agreement terms, and so on. Real estate investment groups work like mutual funds. You own rental property without the management bit. 4. Real estate investment trusts. If you don't have the financial might to buy a property yet, a real estate investment trust is a great idea. Real estate investment trusts are companies that buy rental properties and then sell shares to interested investors. So, you own equity in real estate equivalent to your investment. 5. Real estate crowdfunding. This type of investment involves joining other investors in raising capital for massive commercial projects. Now, I'd like to mention that this is a relatively new space and can be quite risky, so tread carefully. 6. Raw land. As the name sounds, you are essentially buying raw, undeveloped land to develop or sell it later at a profit. So, why should you invest in real estate? Depending on what you invest in, real estate allows you to enjoy steady passive cash flow that can increase with time. Good return on investment, especially in the long term. Wealth protection, more so against turbulent market conditions. Greater portfolio diversification, which spreads out your risks. Good tax advantages, for instance, you can deduct property expenses from your yearly tax returns. That being said, there are also a few cons when it comes to real estate. For instance, finding the right properties takes time. You are still going to pay taxes for any gains. Properties are harder to liquidate, as compared to, say, stocks. Finally, making a profit is not guaranteed, however this is just like any other asset. Real estate value can decline in the short term. So, now we're down to the last but most important question. How can you save up for your first property? Acquiring your first real estate property takes a lot of effort and commitment. So, here are a couple of tips to get you there. Start by figuring out the cost of the property you are looking to purchase. Start conversations with lenders to find out how much they are willing to lend you and how much of a deposit is required. For example, in the UK, lenders tend to lend you 4.5 times of your income with a 10 to 20% deposit. Now that you know the numbers, you can begin to save for your deposit. When it comes down to saving your deposit, here are some tips. Cut down on your expenses by practicing frugal living so that you can save more. If you don't know what frugal living is, I've left a link in the description. Save any unexpected funds. Sell stuff you don't need to bump up your savings. Prioritize building your credit with healthy borrowing practices. If you have expensive debt, pay it up, so that you have more money to put towards your goals. And that is it. All you need to know about real estate investing before jumping on the real estate train. If you enjoyed the video, like and share. Don't forget to subscribe and turn on notifications for more content like this. Thanks for tuning in.